For the last decade plus, the luxury real estate market in Metro Atlanta has been pouring into the suburbs. Think Alpharetta, Milton, Cumming, North Atlanta basically, except for now, there's starting to be a pullback in those markets. Meanwhile, the urban markets like Buckhead, Intown, and Brookhaven are holding steady as this market shifts. As a matter of fact, we're starting to see two very distinct markets emerge here. That and more coming up in this month's Atlanta luxury real estate market update. Let's get right after it. So there's a lot to unpack in this month's video, and when I pop this chart up on screen, it looks like everything's normal. Doesn't look like there's a whole lot going on, right? Because this is your 1,000-foot view. It's the greater Atlanta area for $1 million plus properties. And this is a number that covers 11 different counties. So we're not focusing on 11 different counties in this video. We're going to hyper focus on the more predominant luxury markets within Metro Atlanta. So Buckhead, Intown, Brookhaven, and outside of the perimeter, we're going to look at North Atlanta predominantly. So let's take a look and see what's happening. So when you look at this, 1.35 million since April of this year, and it was 1.35 million for years before that. So that's why I say that real estate's a very hyper local thing. When you look at it, you really have to zoom in because it could literally be different from street to street. So we're going to zoom in on this next chart. So take a look at city level median prices. And when we take a look at Buckhead, of course, Buckhead is up year over year. So is Brookhaven. These are some nice jumps. Outside in the suburbs mentioned in the last couple of videos, Johns Creek continues to do very well. There's not a whole lot of inventory. When something pops on the market, as we'll see, tends to go very quickly here. And then Milton, but you're starting to see some other areas where there's a pullback. So where we've got year over year parity, for example, look at Alpharetta. It was 1.3 million this time last year, and it's 1.3 million at the median middle of the market this year. But look at Cumming. So that's quite a big pullback. And then you're starting to see just some slowdowns in some other areas as well. So this here is median. We're going to take a look at median dollar per square foot, and right at the middle of the market in Buckhead, we're at 428. Intown's not too far behind at 413, but you've got one that's trending up. The other one that had a little bit of a pullback. Sandy Springs is up quite a bit. Johns Creek, and you take a look at the suburbs here, a bit of a pullback. So is this bigger homes being built that are being sold at roughly the same price? Or is it the same size homes that are selling for a little bit less now? So that's the question. That's what we're going to explore. Now, I like median, but I also like to look at average when it comes to the luxury market, because you want to know what's happening with those outliers, because that is the luxury market. So when you've got these ultra luxury properties that sell, they're going to sway the overall average, but you want to see that. So for example, in Buckhead, it's been a nice increase over the last year. The last couple of videos, we've been seeing this go from the 470s to the 480s. And this past month, we hit the 490s. It's not going to be long before it breaks that $500 barrier, and you'll have $500 square foot average property in Buckhead. Now, you've got other increases in Brookhaven, Sandy Springs, a little bit of a pullback in town. Saw that with the median price as well. And then in other parts of the suburbs, Roswell's down, Alpharetta's down, Milton's up just barely, Cumming, East Cobb. When you look at this, I've removed some of the cities that I don't think had enough luxury properties in order to really focus on the bigger markets. So rather than talk about all of Marietta, we're focusing on East Cobb in this specific video. So there's a little bit of a pullback there, a little bit of an increase. So ebb and flow is what you see, depends on which properties are selling in that given month. Now, from a mortgage standpoint, last month we saw rates tick up, not for the jumbo mortgages necessarily, but for the conforming, after the Fed announced that they would cut the rates by 25 basis points. A lot of people expected rates to go down, but as I've mentioned in previous videos, they don't necessarily follow what the Fed fund rate does. But they've been trending down over the last couple of weeks. When you take a look at this, we're almost at the same thing here for jumbo and conforming. There's a little bit of a difference there. Like you see the 0.03%. So they've come back and they've touched there. Now, generally speaking, it's more expensive to take out a jumbo loan than it is a regular conventional mortgage. And that's what that black line is compared to the gold one. But in September, after that Fed fund rate reduction, it actually swapped. And for some reason, the conforming rate was a little bit higher than the jumbo. Now that looks like it's about to flip again. and it's going to get back under in terms of rates, right? So we'll see where that goes. But one thing that you can see, even with this little spike here after the September announcement, generally speaking, since April, this is a downward trend. So I'm still optimistic that we're going to touch the low sixes, potentially the high fives over the next couple of months. Of course, a lot of that depends on a lot of other factors, right? What's happening with the job market, the stock market, the overall economy, and what the Fed continues to do with these last couple of meetings. So let's take a look at inventory. So we're going to look at new, active, pending, closed, and failed listings. So overall, 2025, we had more new listings coming to market than we had over the last couple of years. You can see the gold line here is well above everything else. Then in the month of August, it basically went back to what we had last year in 2024. And now again in September, that's quite a bit more than we had in the previous year coming to market. So it's 736 versus 607. There's almost 130 more listings coming to market this month. So where did those listings come to market in? So taking a look at this, and you can see here that there were 98 of them in Buckhead. In town 75, it's down from last year. Big jump up in Roswell. That's a big jump up from 20 listings this time last year to 44 coming to market in September. Up in Alpharetta, Milton. So you can see that in a lot of these different cities, inventory is up almost everywhere. Where it's down, there are less listings in Brookhaven and Johns Creek. Now, Johns Creek, there have been less listings coming to market in Johns Creek pretty much all year long, and that's why we've seen Johns Creek remain a relatively competitive market, actually a very competitive market. So let's jump into that a little bit more. So we're going to take a look at active listings, and the trend for Atlanta as a whole for the luxury market continues to be above last year. So we're currently at 1976 active listings that are above $1 million, roughly 210 more than this time last year. So inventory is a little bit higher. And when you look at what that distribution is, it's down a little bit in Brookhaven and Buckhead and in town, Sandy Springs, but up in Johns Creek, up in Roswell, up in Alpharetta, Milton, Cumming. Look at that big difference in Cumming. That's a big jump in inventory. East Cobb and Suwanee. So at the beginning of the video, when I talked about having two very different markets start to emerge, this is one of the indicators as you look at the active number of listings, because that's going to play into what's available for demand and a lot of other things that we're going to look at. But the in-town markets, in-town, focus on these three here, they're all down comparatively speaking to last year. Meanwhile, everything in the suburbs, Sandy Springs on that cusp, because half of Sandy Springs is on this side and half is on this side, right? It really just depends on what zip within Sandy Springs. But look at every single other city in the suburbs in North Atlanta, there's more inventory on the market. More on that in a moment. So in terms of pendings, now this is one where I was really worried with where that trend was going over the last couple of months, because in the last video, we were here talking about August, and then in July, you kind of see at the beginning of the year, we were outpacing properties going under contract, year over year for every single month. And then that wasn't the case suddenly. And here I was wondering, would this really start to trend back down? But there were more properties that went under contract in September than in all of these other years. So check that out. When you take a look overall, it was 346 and it's 278. So where did those properties that went under contract, where were those concentrated? So the first thing that pops to mind when we take a look at these pending listings is take a look at in-town. Look at this jump up in the number of pendings year over year. So 46, there's still a bunch in Buckhead at 45. And Brookhaven in town doesn't look like there's a ton of stuff happening in Brookhaven, but you've got to understand also that there's less listings. That's a pending ratio of about 17, 18%. And Buckhead has a pending ratio of 16. So we'll look at that a little bit later. But this is good relative to the number of listings that are available there. Now in the suburbs, you're starting to see this go down in certain areas, right? And then it's up a lot this year in Alpharetta. There's a whole bunch of properties that went under contract in Alpharetta. Now, speaking of pending ratio, we've got it right here, and take a look at these in-town markets, right? So look at that. In-town is up year over year. Brookhaven is up quite a bit year over year. And the suburbs, with the exception of Alpharetta, you're starting to see a pullback on the pending ratio. Now, the pending ratio is you take the number of properties that are going under contract and you divide them by the number of available properties and the ones that went under contract. Gives you an idea of if there are X amount of properties available on the market, how many of those are going to realistically go under contract in a given time period. So it kind of gives you an idea of what demand is in a specific market. So if you're a seller, you want to see this number as high as possible. If you're a buyer and you want to buy in a given area, the lower this number, the better the deals you'll probably find in that area, because there are less properties going under contract, which means that a good seller will know that if they have somebody nibbling at their property, it's probably a good idea to try and find a way to make a deal work because there aren't a whole lot of other nibbles. So in town, you're seeing an increase with the pending ratio. And then take a look at this, Johns Creek. Now, I'm not saying that properties aren't selling in Johns Creek. They're selling very, very well, but you're starting to see a little bit of a shift. This time last year in Johns Creek, 1 out of 3 properties, the pending ratio was 33%. That was a very, very high ratio. Now it's half of that, but that's kind of in line. Atlanta is right at 14.9%, and 16.2 is basically at that baseline. But in every other city on the north side, you're seeing pullbacks, with the exception of Alpharetta. Sometimes they're big pullbacks. Can you imagine in Suwanee, for example, going from 11.5 down to just 5%? That's there are a lot of choices in Suwanee. So if you want to be up in River Club or one of those other areas up there, there's starting to be quite a bit of choice. And that means that as a buyer, you can make more aggressive offers. So moving along, we're going to take a look at closings. Closings also went up this past month, which is nice because it had really come in line with last year. And now it's trending the other way. So when you take a look at closings overall for the month of September, there were 332 compared to 279 last year. So where are those closings located? So up in town, down Buckhead, up Brookhaven, and then a lot of these other cities, even though this is why it's such a confusing market when you look at it overall, because for some metrics they're doing well and in others they're not. But all of these cities this past month had better closings than they had in the previous year, with the exception of Johns Creek. But I think that has to do with there just not being as many listings in Johns Creek. You can't close them if they're not for sale. So that brings us to this familiar chart, and it's comparing active listings to the amount of closings. And when you look at the 1976 into 332, you can see here that these are getting closer to each other. Last month, we were at a 6.66 to 1 ratio of actives over closings. This month, it's 5.95. So that gap is closing. Call it 6 to 1 overall, but it's not running away like we would have thought it was trending previously. So when you take a look at what's happened here, and you look at this curve here, the number of active listings relative to closings was starting to run away basically, but that's kind of reeled itself back in. So luxury market's different than the overall market. That's why I like to do a video that's dedicated to it, because it runs counterintuitive sometimes. It's just it's a different market. So let's take a look at the failed listings. Those are your expireds and your withdrawn listings. And what immediately pops out to me is that when you take a look at what's happening, OTP, North Atlanta, that's a lot of failed listings compared to what's happening inside the perimeter. So sure, in town itself, up 5, Brookhaven up 3, but Buckhead is down 10. Meanwhile, over here for all of these other cities, that's a net positive of 42 extra failures year over year. Meanwhile, in town, it's 2 less when you factor them all in. So there really is starting to be a shift. I think more and more people are preferring the safer bets of in-town luxury compared to the suburbs right now. There's just a little bit of a shift. So let's take a look at average days on market. So average days on market for Greater Atlanta as a whole in the luxury space is 60 days. That is starting to get pretty slow. So in town, 52, Buckhead 66, Brookhaven 59. Johns Creek, I mentioned, they're not in trouble. There's just not enough listings. Demand's still very high. And one of the lowest days on markets anywhere in the metro right now is in Johns Creek for $1 million plus homes. East Cobb continues to be strong as well. We have a lot of other areas now that are starting to crest that average and or go above it. And Suwanee is leading the pack right there in the suburbs at 68. Now take a look at how this compares to median days on market, especially year over year, because in coming this time last year, the median days on market for a property at the middle of the market was 10 days. This year it's 36. That's a huge, huge increase. Milton 21 to 41. That's a big, big increase. Roswell 11 to 26, Suwanee 9 to 25. Now in town, it's down. Buckhead, it's down, and Brookhaven, it's up a little bit. So when you're taking a look at it again, you're starting to see that separation between the ITP markets and the OTP North markets when it comes to median days on market. Next, that brings us to showing activity. And showing activity, I feel, is a good lead indicator because it shows us what is likely to go, which areas are heating up, where are people actually looking, and what's possible. If you don't have showings, you can't have properties go under contract. So when you have certain areas that have higher levels of showing, more than likely those areas will also experience more properties going under contract. So let's see if I'm right there, right? So when you take a look at this, showings are up in town. They're up in Buckhead, up marginally in Brookhaven, about the same in Sandy Springs, down in Johns Creek, roughly the same in Roswell. We saw a whole bunch more properties go under contract in Alpharetta this last month. Well, you can also see that they had the most showings period of any city or location or area in the greater Atlanta area for the luxury market. Milton, parity coming down. East Cobb was up as well, and Suwanee was down. Now, when you take a look at a place like Johns Creek, for instance, this is 167 showings for just 31 listings. So your average showings per listing is really high. Meanwhile, in coming, this is 261 for 162 listings. I think I've got a chart on showings per listing. Let's take a look at that. So showings per listing in Johns Creek, this is a really high ratio, shows that demand is really high. There are a lot of people looking in Johns Creek relative to the number of listings that are available there. Now take a look at this because this is really fascinating. So this is showings per pending. Now Johns Creek has 30 active listings. This past month, 6 of those went under contract, but there's a bunch of people looking. So it's 18.5 showings per pending. When you take a look at the other chart that's really high here, the other one is Suwanee, it's 17.5. But in Suwanee, you've got 70 listings and only 4 of those went under contract this past month. So the ratio 4 into 70 versus 6 into 30, that's a big, big difference. And it helps to explain why the pending ratio on Johns Creek is 16.2 and in Suwanee is 5.4. So a bunch of people are looking at houses in Suwanee, they're just not buying them right now. Now, here's another way of visualizing this. In a seller's market, one that's really, really hot, these two lines are pretty close to each other. And in a market that starts to favor the buyer, as the markets kind of pull away and go from a seller's market into a buyer's market, this is going to get wider and wider. And so when you look at a place like Suwanee, I just mentioned that they have a pending ratio of 5.4. It's got one of the widest gaps here between showings per listing and showings to pending. Now, before we talk about months of supply, which is going to tell us, are we in a buyer's market, a seller's market? I want to look at price reduction information. And this here, I'm going to show you 2 charts. This one here is price reductions on active listings. So these are listings that have not yet attracted a buyer, or if they have, they've gone back to market and they're still active. And this shows, it shows not the total number of price reductions, but if a property had 1 or more reductions. So take a look at this. So we were talking about Suwanee, right? In Suwanee, you've got almost 42% of all the listings have had a price cut of 5.8. Some of the biggest price cuts have been in Sandy Springs. So a little bit less than a third of those active listings have had a cut, but when they've cut by 8.5%. Take a look at Cumming, 37.2 have reduced by an average of 7.9. So these are active cuts. You can kind of see across the metro, you're at 6.5% on average for active listings above $1 million. Roughly a third, a little bit over a third of all of those properties have had a price reduction, 1 or more. Now, look at how this compares to pendings, because pendings show us properties that have been successful in attracting a buyer. Actives are still available. So it's not that they've failed, but they just haven't yet attracted a buyer, right? So take a look at this. So when you look at these, now, this is incredible, right? Because not every property needs a price reduction to attract a buyer if they price right. So look at what's happening in town. So in town, you've got 46 properties that went under contract this past month. Only 17% of those needed a price reduction. So that's 8 out of 46, which leaves 38 properties that went under contract that didn't need a price reduction. So if you're selling in some of these hot areas and you price your property properly, tongue twister, there's a good chance you won't need to go through a price reduction and play that game. But I know I mean, here's the thing. Properties have appreciated so much over the last 5 years, especially since the pandemic. And we all have more equity in our homes than we've ever had ever. You're basically still at the top of the market. So I understand wanting to extract as much of that equity as possible when you're selling. But as this market starts to shift, it's dangerous to test the market because the more time that you spend in the market, the more price reductions you have, the more stigmatized your property becomes, and the bigger the reductions you end up needing in order to attract that buyer. Because after a certain while, buyers are starting to wonder what's wrong with the property. Is it a problem? Is it a pricing problem? Is it both? So when you price it well, they're selling and they're not needing these price reductions. And the 8 that did need price reductions in town needed a reduction of 7%. Look at Roswell. That's 85% of the properties that went under contract did not need a price reduction, but those that did needed a price reduction of 11%. This is some really interesting data. If you price it right, you're going to sell, and you're going to sell relatively quickly too. And if you're not, you're going to chase the market with these reductions. Okay, so wouldn't it be nice to know where the largest price reductions are based on zip? Well, let's take a look at that data. So in Forsyth County, 30028, 27.6% of all active listings have had a price cut of 13.6%. It's crazy high. In Vinings, 30339, 40% of the listings have had a price cut of about 10%. And then in town, 30309, that's Ansley Park, 41.7% have had cuts of 8.1. So you can kind of see where these others are located, from East Cobb to in town, Roswell, pretty much all over. These are still some massive, massive cuts in these zips. So is that an opportunity to get a better deal in these zips? Does it show that sellers in these zips are a little bit more motivated, or did they just start really, really high and now they're having to chase the market a little bit? Could be a little bit of everything, right? All right, so ultimately we're going to go and take a look at the list to sales ratio. So list to sales is what sellers actually sold their houses for after reductions and everything. It's sales price over original asking price. So this time last year was 96.8%. This year, the metro is at 96.3. When you take a look in town, doing better this year. Buckhead is doing better this year. Brookhaven's down a little bit. But look at how, with the exception of Sandy Springs, everywhere else, you're getting properties for even lower than what the original ask price is compared to just a year earlier. Look at East Cobb. Last year was practically 100%. Same thing with Johns Creek. Now in Johns Creek, they're selling for 98.1. In East Cobb, they're selling for 96.6. You're basically getting 3% off and change on these properties. Suwanee down. And these are big changes because if you take a look at Cumming, that's 5.6% off the original asking price. So mentioned again, a divergence between the in-town markets and the North Atlanta markets. We'll take a look here with the exception of Brookhaven. When you come and you take a look, Buckhead's up, in-town's up, that's 98%. So those markets are doing better this year than they were last year. They're more resilient. And you're starting to see a clear separation now between ITP and OTP, right? So in the areas that I've been covering in this video, we're not looking at Greater Atlanta as a whole. This is specifically ITP markets and the North Atlanta markets that were $1 million plus. 73% of all of those listings sold for less than their asking price. Only 11% sold for asking, and 15% still managed to get above asking sales because they priced well. They were in hot areas. The condition of the property was A+. They got multiple offers and the price went up. So you're still seeing, it's the same thing as last year, but where you're seeing a difference this year, year over year, is in full price versus below. So you have less and less properties getting what they're asking for. Now, how many sellers paid closing costs? In the luxury market, it's always been a little bit less because there's a lot of cash transactions and you don't necessarily need closing costs in those transactions, but they're still up year over year. And now they're paying an average of almost 14 and a half thousand dollars compared to 13 and a half last year. So it's up on average an extra $1,000. Ultimately, are we in a buyer's market or a seller's market? Well, let's take a look. So the shaded area is balance. Balance, there's no advantage to the buyer or the seller. It's an equitable market. Sellers are going to give some off of their asking price. They're going to pay concessions. They're going to agree to do repairs, but nothing crazy. It's a balanced market, right? Anything under this 5 months of inventory is still a seller's market. Anything above 6 months is a buyer's market. In a seller's market, the seller is advantaged in negotiations. Buyers tend to pay closer to the asking price, less concessions. And obviously in a buyer's market, buyers are getting quite a bit more in their favor, more off the price, more in concessions, more in repairs. So when you take a look at it in town, look at that, down. Buckhead this time last year was in a balanced market. Now it's right at the cusp and it's trending back towards a seller's market. Brookhaven's up year over year a little bit, but still in a seller's market. So when you take a look at these areas, look at what's happening year over year in the suburbs. So Sandy Springs went from 3.6 up to 5. Johns Creek, still a very strong seller's market at 2.8 months of supply, but it's up nonetheless year over year. Roswell parity, Alpharetta roughly parity, Milton now a balanced market. Cumming went from a seller's market last year to a buyer's market this year in 12 short months. So if you're looking to buy anything in Cumming right now that's above $1 million, you should be negotiating very diligently because you can get better deals on properties, especially on new construction. They're giving a lot of incentives and they're coming off their prices by quite a bit to make deals happen. East Cobb, roughly parity. And in Suwanee, we've trended from a seller's market into balance. So I think when you look at these numbers, it's pretty telling. The market is starting to split. The in-town versus the suburban north market in the Atlanta luxury market is shifting. And if you're selling a home and you're in North Atlanta, then you should expect that buyers are going to negotiate a little bit harder than they have in previous years because market's softening a little bit. Now, if you want access to the data that I used in this month's video, I've got a link in the description, and in that first comment, it'll bring you to a form. Fill it out, be happy to send it to you. As always, if you're going to watch more videos today and you haven't yet watched what's happening in the regular market, because maybe you're not in the luxury market, but you want to know what's happening overall, definitely watch this video next. Thank you so much for watching, and I hope to see you on the next one.